Interest rates have dipped, but is now the best time to refinance, or should you wait for even lower rates? In this video, we're breaking down exactly what you need to consider so that you don't miss out on potential savings or get caught waiting too long. The Fed recently indicated that interest rate cuts are ahead, saying that the time has come for policy to adjust, essentially saying that they're going to revert from this super hawkish stance that they've had over the last 18 months and are going to start lowering rates. In fact, at the time of this video, the market is pricing in 100% that the Fed is going to cut come September 18th, with 73% of the market expecting a 25 basis point cut, whereas the other 27% is expecting 50 basis points. So with the Fed cut just a few weeks away, you should absolutely wait to refinance until they lower those rates, right? And the reason I say that is because the market's already priced in a large majority of what's going to happen on that day. And that's exactly what I want to walk through in today's video. I want to talk about the current rate environment. I also want to talk about the key factors to consider when refinancing. And then lastly, I want to talk about refinancing now versus waiting in order to help you make more informed decisions throughout this process. My name is Jeb Smith and my YouTube channel is all about real estate and mortgage. And if you're somebody that owns a home or plan on owning a home and you want to stay updated on everything mortgage and real estate related, do me a favor and consider subscribing to the channel. And with that, if you find any value in today's content, do me a favor and hit that thumbs up. So at the moment, there's this belief that interest rates are likely going to continue moving lower. So the question on everyone's mind is, should I take advantage of where interest rates are today, or should I wait until they move lower and take advantage of them then? And with that, I want to start with a story about myself, because I'm someone that's actually refinanced 2 times in the last year as interest rates have moved down. As many of you know, last November, I bought a new property, and at the time I got my mortgage back then, interest rates were sitting around 7%. In fact, it was 7% on a 7-year ARM. Yes, I took an adjustable rate. And the reason I took an adjustable rate is because I had a really strong belief that interest rates were going to come down in the future. And since then, I've been able to refinance that mortgage from a 7% to a 6.5% early in 2024. And recently, just a couple of days ago, closed on my second refinance within the last 10 months, taking my rate down to 6% on that same 7-year ARM. And those 2 refinances have saved me over $800 per month. So could I have just waited for interest rates to go lower and refinance one time? And the answer is yes. But here's the thing, I didn't know how quickly interest rates were actually going to go down. In fact, when I got that first refinance at 6.5%, once I locked that loan, interest rates moved back up towards my original rate of 7%. In fact, they stayed there all the way through April. And that's when interest rates started to moderate once again. So from that period of January through April, I was saving $400 per month from that original refinance. Now, for those of you watching this video going, well, you had costs associated with that refinance. No, I didn't. All my closing costs were actually covered by the lender through a credit at that time. The only thing I paid on that loan was prepaid interest and property taxes, which I would have paid anyway. And that's exactly what I did on the second refinance as well, when I took it down to 6%. In fact, that's a similar story as well. As soon as I locked that 6% interest rate, interest rates actually moved back up again and are currently sitting somewhere around 6.25% on that same loan product. But because I was proactive and because I watched the market every single day, because it's more or less my job, I was able to take advantage of that move at the time it happened. Now, for a lot of you out here watching the video, you don't follow interest rates like I do, nor should you. And what I recommend is, if you're somebody that is considering refinancing, talk to a lender, get on their list, get on their short list, if you will, of people to call if and when interest rates go down, so that you don't have to watch it every day. You can just be on their list so that when interest rates drop to a number where it makes sense, they can actually reach out to you to see if you want to move forward. And the reason I brought up this story is to illustrate the point that I'm trying to get across in this video, is that yes, you can wait for interest rates to move lower, but during that period of waiting, rates could actually increase, delaying that opportunity to take advantage of lower rates. During that same period of time, by waiting, you could actually have savings during that point by just taking advantage of that rate when it presents itself, which is exactly what I did. Now, before I talk about the current rate environment and the benefits of refinancing now, I want to talk about what you need to consider if you do plan on refinancing. And the very first thing you need to consider is your current interest rate, where you need to get to in order for a refinance to make sense. In fact, one of the questions I get all the time is, how do I know when I can refinance? When does it actually make sense? How much does the rate need to drop in order to make it make sense for my refinance? Well, my lender has a quick way that he uses with clients in order to determine when it actually makes sense to refinance. And the way he does that is he takes $125,000 and divides it into the loan amount. So say, for example, your loan amount's $125,000. Well, if you divide 125 into 125, that means you need to save 1% on your interest rate in order for it to make sense to refinance. And you can use that 125 with any number. 125, say your loan amount is $250,000. You need to save about 0.5% in order for that loan to make sense. If your loan's $500,000, you need to save about 0.25%. If your loan's $1 million, you need to save about 1/8% in order for that refinance to justify itself. But at the same time, you can't just use that. You also have to consider what they're charging you to refinance. How much cost are you actually being charged to refinance? Are you paying points? Is the lender charging origination fees? Are they charging processing fees? Or are they giving you a credit in some cases, like they did with me, to cover the costs associated with that loan? So there really are no costs involved other than the prepaids and any sort of property taxes or insurance that's due. At the same time, just make sure your lender's also not building it into your loan amount. When I refinanced, I had paid down about $4,000 to $5,000 on my principal since my last refinance. So when I got my new loan on the last refinance, I got it at my most recent balance. I didn't take my balance back up to the original amount because my goal is to pay off this home at some time. And what a lot of lenders will do is they'll say there are no costs associated with this loan, but in turn they'll jack up your loan amount, or in some cases they'll take you back to a 30-year term in order to cover those costs and to make the savings actually look greater than they are. And for anyone looking to actually pay off their mortgage, you should try to go back into the same term that you previously had. So if you had a 30-year fixed and you've been in that loan for 2 years, try to refinance back at a 28-year term, or ask the lender to give you a side-by-side comparison of whatever term you had, say 28 years in this case, versus say a new loan at 30 years. And you can also have them do the same thing for the loan amount. Use your current principal balance, not the original balance that you had, because those are some shady ways that lenders tell you that there's no cost involved when in fact they're just building them into the loan. And you want to absolutely avoid that if you can do so. But at the same time, if you are paying some cost for the refinance, just figure out what your break-even point is. How much are you saving with your new loan versus how much cost is actually involved with that refinance? Because if interest rates continue to trend lower, you might want to refinance. So if the recoupment period for the cost that you paid is 3 to 4 years, but you think interest rates are going to move down sooner than that, why would you want to keep that loan for 3 to 5 years to recoup that money? You don't. So with that, you don't want to pay a lot of money to refinance if you think interest rates are going to continue to move lower, which is exactly what I did. And at the same time, there's a lot of people out there getting persuaded to buy points or thinking they should buy down the rate by paying points. And if you're someone that believes interest rates are going to move lower and you're still going to have a job and you're still going to be able to qualify for that loan, do not pay points to buy down that rate, because chances are you're going to get an opportunity in the future to take advantage of a lower rate. And the last thing you want to do is have sunk cost associated with that original refinance where it no longer makes sense to take advantage of the lower rate. But at the same time, if you're someone that's getting close to retirement, your job is changing, you're not sure you're going to be able to qualify for a loan in the future, those are times when you might consider actually paying points to buy down the rate, because you might not get another opportunity in the future to refinance. So in that case, if you're considering buying down points, then it might make a little more sense. But the reality is you need to have a professional on your side, someone guiding you through the process, someone giving you side-by-side comparisons, not someone just saying, yes, you should refinance now and not giving you any explanation or any comparisons, because unfortunately, there's a lot of people out there that will do that. You want somebody that's an expert that's going to guide you through the process. Now, if you're watching this, you don't know where to start, my team would love the opportunity to speak with you and help walk you through that process. You might already be talking to a lender and have a loan estimate. That's okay. We would love to see it. We would love to review it and tell you whether or not we can help. Now, in many cases, my team looks at them and says, no, we can't help. That's a really good deal. You should move forward with it. Whereas in other cases, we can not only charge you less fees, but we can also get you a better interest rate. So if you're someone going through the process or thinking about going through the process, do me a favor and check that link below. But here's what I'll say. There's no guarantee that interest rates are going to move lower, but where we are at the moment, the Fed has come out and said that they're likely going to start lowering rates. In fact, it's a certainty as of September the 18th. But understand, the bond market, the interest rate market, a lot of it moves ahead of the Fed because they already know what the Fed's going to do based on what the Fed has said in previous meetings. So the reality is interest rates are likely going to continue lower, but they're not likely going to see a big drop in one day. it's going to be a slower grind over time, which means if there's an opportunity to refinance now, you should probably take advantage of it, because it could be 6 months, a year and a half down the road before you're actually able to take advantage of those lower rates. And what are you missing out on during that period of time with regards to savings? For me, I was saving $400 a month from that first refinance. And I don't know about you, but $400 a month every single month is pretty significant. Now, the benefits of refinancing are going to vary for different people. Some people are looking just to lower the rate. Some people are looking to lower their rate and pull cash out. Some people are just trying to get cash out. Regardless of what you're trying to do, I think for most people, the benefit is to do it sooner rather than later, because by waiting, you just don't know what's going to happen. You don't know how long it's going to take. And the sooner you can save money, either on a monthly basis by reducing your interest rate, or in some cases pulling cash out, paying off debt, and lowering your overall expenses, the better off you're going to be long term. In fact, you're going to have interest savings over time the lower you can get that rate, as long as you're not building cost into your loan, as long as you're not going back into a 30-year fix, as long as you're not taking your loan amount up and up and up and up every time. Now, I want to end today's video by talking about a little story. I told you guys earlier, if you have a loan estimate, send it to our team. They'll review it and they'll get back to you and tell her whether or not they can help you, or whether or not you have a good deal. Well, I actually had somebody reach out to me on Instagram, basically giving me their scenario, and I want to run it by you real quick, because this is the kind of crap that happens when you deal with somebody that's not a professional out there in the market. So this particular borrower had a 30-year fixed mortgage. Their original loan amount was sitting around $250,000. Now, they've paid it down since then, and it was currently sitting around $246,998. And at this time, they had an interest rate of 6.5%. So they reached out to someone online talking about refinancing, and the person told them, yes, they could actually save them quite a bit. They could give them a 5.625% interest rate. And not only that, they could take them into a 20-year loan versus the 30-year loan that they had before, and their payment would more or less stay the same. So the guy that reached out to me thought, hey, this is a great idea. I can keep my payment essentially the same and knock multiple years off my loan. But here's what he didn't understand. They were taking his loan amount of $246,998 up to a new loan amount of $260,500. So they were essentially charging him $13,000 to $14,000 in closing costs in order to do this loan. And in fact, his payment was going to go up about $100. So basically that $14,000 that he was paying was going towards the lender's fees. It was probably going to buy down the rate at the same time, which is actually an awful idea, because there's a really, really good chance that within the next year, 18 months, interest rates are likely going to go down to 5.625% on a 30-year fix without having to buy them down, which means that that same client could refinance at some point in the future without having to pay any cost at all with that same loan amount and get the exact same savings. So with that, this is where I'd love to reach out to you. Have you been talking to people about refinancing? Have you recently refinanced? Is it something you've been thinking about? What kind of experience have you had out there? Are you finding knowledgeable professionals? Or are you finding people that are just trying to sell you? I would love to know in the comments below. And if you've had success, tell me about it. And if you've had pain, let me know about that as well. I would love to know exactly what you're going through. And at the same time, if you need a professional to guide you through the process, do us a favor and reach out, as we would love the opportunity to help. Now, this video was all about refinancing now versus later, but I also filmed a video on the 5 mistakes that you absolutely have to avoid if you're refinancing. So if you're planning on going through the process now or later, do me a favor and check out that video here.